Two things happened on Thursday, and both of them are true.
The Philadelphia Fed's August survey came in at 47.4, against about 25 expected. That is the strongest reading since April 2021.
And Walmart fell 9.15% to a 52-week low on 402% of its normal volume.
The strongest regional data in 5 years, and the largest retailer in the world having its worst day since 2022.
The market went with Walmart. The S&P closed down 0.87, and it spent the whole afternoon getting there.
Quick note, this is education and entertainment, not investment advice. Companies are examples. Never buy or sell calls. Do your own research. S&P 500, 7,641.16, down 0.87%.
Dow 52,759, down 1.32. Nasdaq Composite 26,067, down 1%. Russell 2,992, down 1.34.
VIX 1601, up 7.52%.
And the shape of the day matters. At 12:38 in the afternoon, the S&P was down 0.35. It closed down 87. It decayed all afternoon.
Energy was the only sector that finished green, up 0.27. Real estate up 0.20.
Then technology down 0.29. Communications and utilities both down 57. Financials down 92. Industrials down 1.20.
Consumer discretionary down 1.61. Staples down 1.41. And healthcare was the worst sector on the board, down 1.87.
Start with the number that was good, because it was very good.
The Philadelphia Fed's manufacturing survey for August, 47.4 against about 25 expected, up from 41.4 in July.
Highest since April 2021.
And the breadth underneath it held up. 57% of firms reported higher activity. About 10% reported declines.
The employment subindex was 27.9.
Then jobless claims for the week ending the 15th, 206,000 against 210,000 expected.
So, manufacturing activity at a 5-year high and firings still low. On the data alone, Thursday was a good day for the economy.
And then the largest retailer in the world reported before the open.
Revenue, $187.9 billion, up 5.9%. That beat.
Adjusted earnings, 81 cents against 74 expected. That beat too. And they raised the full-year outlook.
The stock closed down 9.15% at a 52-week low on 402% of its median volume.
Its worst session since 2022.
So a beat, a raise, and a 9% decline. The reason is in the composition.
U.S. comparable sales grew 2.6% against about 3.8 expected. That is the slowest in 6 years.
But look at what is inside that. Excluding pharmacy, comparable sales were up 3.4%.
The pharmacy line cost them roughly 125 basis points, and the cause is a rule change. Medicare drug price caps under the Inflation Reduction Act took effect on the 1st of January.
So most of the gap between 2.6 and 3.8 is a drug pricing regulation, not a shopper.
And U.S. e-commerce grew 24%.
Which is not the profile of a consumer in retreat.
What actually moved the stock was the quality of the beat and the guidance. The full-year raise leans on a one-time $2.9 billion tariff refund, and third-quarter earnings are guided roughly flat, 62 to 64 cents.
Our read. This was a re-rating on earnings quality, not a verdict on the customer.
And that puts a pattern in view, because this is the third one this week.
Home Depot reported on Tuesday with a tariff refund inside the beat. Target on Wednesday with a $994 million refund worth $1.65 a share.
And Walmart on Thursday with $2.9 billion.
Target rose 4.28% on Wednesday. Walmart fell 9.15% on Thursday.
Same mechanism, 3 days running, and the market paid for the first two.
The rest of retail went with Walmart. TJX down 2.64% on 259% of its volume. Lowe's down 1.21%. Target itself down 0.47.
Now the part that is genuinely odd. Strong data would normally raise the odds of a rate hike. It did the opposite.
Odds of a September hike sit around 28 to 29%. They came down.
And the front end of the curve did not move at all. The 13-week bill closed at 3.70%, exactly where it was the day before.
third consecutive session, the front end has refused to move.
On Wednesday, the long end fell on the buyback announcement and the front end sat still. On Thursday, the long end rose on strong data, and the bill still sat still.
Because the rest of the curve did move, and it moved strictly by maturity.
5-year, 4.35 to 4.39. 10-year, 4.65 to 4.72. 30-year, 5.19 to 5.24.
5 basis points at the long end. That is a small move, and we are not going to make it bigger than it is.
But the shape is the interesting part, not the size. The bill unchanged. The 30-year up 5.
A market that reprices growth without repricing the Fed is trading term premium, not policy. That has been the pattern all week.
And there is one more input that the Fed cannot do much about.
On Wednesday evening, the administration announced what it called an economic D-Day for Iran after the ceasefire collapsed. Secondary sanctions against anyone assisting Tehran, naming oil smuggling, swap lines, exchange houses, ship registries, and front companies.
Crude closed at 86.42, up 2.41%. Brent finished near 94 after touching 95.40 during the day.
Fifth consecutive daily gain for oil, and energy was the only green sector.
Treasury Secretary Besant said publicly that he does not really understand the spike.
And this is the input that does not respond to interest rates. A supply shock in oil raises prices with no help from demand. That is inflation. A central bank cannot hike away.
Inside equities, the selling had a clear ordering, and it matched the curve.
Security software derated as a group. CrowdStrike down 5.60% to 190.34. Zscaler down 5.23. Okta down 4.99. Cloudflare down 4.44. Palo Alto down 2.84.
And over the 6 sessions from the 13th to the 19th, the whole high multiple complex. Cloudflare down 11.8. CrowdStrike down 10.6. Palo Alto down 9.2. Okta down 8.9. Fortinet down 7.6. Against the software index down 3.3.
CrowdStrike also had its own news. Their chief technology officer, Ilya Zaitsev, is leaving after 13 years to start an AI cybersecurity venture fund with no successor named.
To be fair to the company, he's going to a fund, not a competitor. That is a softer event than a defection.
In power, the same ordering. The regulated utilities barely moved. American Electric Power down 45 hundredths, Duke down 74, Southern down 82.
The merchant generators fell more. Talon down 1.66, Vistra down 2.63, NRG down 4.33.
With 2 exceptions worth naming, Vertiv closed up 1.39%, green on a red tape, and Constellation at down 46 hundredths, traded like a regulated utility rather than a merchant.
Alibaba reported before the open and did something the tape has not done for a week.
Start with the bad half. GAAP net income 10.4 billion renminbi, down 75% year-over-year. Adjusted EBITDA 27.3 billion, down 30%.
Capital spending 67.7 billion renminbi, about $10 billion, up 75%. And free cash flow was an outflow of 44.7 billion, roughly $6.6 billion.
Earnings per share about $1.26 against $1.85 expected.
Now the other half. Revenue 269 billion renminbi, up 9%. External cloud revenue up 45%, the fastest in 22 quarters.
AI product revenue 12.4 billion renminbi, which is 35% of external cloud, at an annualized run rate of 49.5 billion. 12th straight quarter of triple-digit growth. And the cloud EBITDA margin went to 12%.
Management said compute shortages could last to 2030, that AI data center payback is 3 years or less, and that the AI run rate should approach $10 billion next quarter.
Here is what the tape did with that.
It opened at 123.47. It fell to 121.88, down 5.45%.
And it closed at 130.53, up 1.26%. The high of the day was 130.61.
It closed 8 cents off its high. 99.1% of the day's range on 27.9 million shares.
A 7.1% intraday reversal on the day the S&P closed at 9% of its own range.
For a week, strong AI-linked results have been sold. This is the first one that was bought, and it was bought on a profit collapse caused by AI spending.
Our read. If the market is starting to pay for the capital spending rather than punish it, that is a real change. 3 things keep it from being a conclusion.
One print is not a pattern. It is a Chinese ADR with its own flow dynamics. And the rest of the China complex did not confirm. The China Internet ETF down 1.95%. NetEase down 5.85% the same day.
So Alibaba was strong on its own, not as part of a sector move. The real test is NVIDIA on the 26th.
One more that has been building all month. The gold miners are re-rating, and they are moving at a multiple of the metal.
From the end of July through the 19th, Agnico Eagle up 43%, IM Gold up 39%, Wheaton up 35.2%, Newmont up 33.5%, the miners ETF up 31.3%, Kinross up 29.4%.
And gold itself up 11.4% over the same stretch.
So the miners are running at 3 to 4 times the metal.
Thursday added to it. The miners ETF up 2.59%, Kinross up 5.12%, IM Gold up 3.96%.
The mechanism is margin. All-in sustaining costs below about $2,000 an ounce against gold near $4,500 means each incremental dollar of price drops almost entirely to the bottom line.
One thing to keep in frame. Gold is still well below its January high. This is a recovery inside a drawdown, not a record.
Ter Warsh gives the Jackson Hole keynote on the 28th, and there is a claim circulating that he has floated tolerating inflation between 2.1 and 2.9%.
The official record does not support that. At the June press conference and in his July testimony, his words were that there is no soft target. There is only a target, and it is 2%.
He did create 5 task forces: communications, balance sheet, data, productivity and jobs, and inflation frameworks. Those reconsider methods and implementation. They are not authority to move the target.
And on the Treasury buyback from Wednesday, one thing worth stating plainly. The program raises the cap from $2 billion to at least $4 billion per operation from September 9th to November 4th, with a review at the November refunding.
The Treasury announced no yield ceiling. The idea that they are defending 4.7 or 4.8% is an inference by commentators, not stated policy. It is not yield curve control, and it is not Operation Twist.
In the Gulf, tanker economics are at records. Very large crude carriers on the Gulf to Asia route are reported at $510,000 to $520,000 a day against $100,000 to $150,000 before the conflict. War risk insurance is running 1 to 2% of hull value, more than $2 million a voyage.
Non-Iranian transits through Hormuz are down 30 to 50%, and Maersk, CMA CGM, and Hapag-Lloyd have all suspended Gulf transits.
Ahead, the Canada tariff pause expires Saturday. Intuit on the 25th, NVIDIA, Salesforce, CrowdStrike, and the July PCE inflation report all on Wednesday the 26th.
Marvell and Workday the 27th, Jackson Hole the 27th through the 29th, and Broadcom on September 2nd.
And one number to carry into NVIDIA. Consensus is around $92 to $95 billion, which sits above the company's own guidance of $89.2 to $92.8.
That is the same configuration that broke Broadcom on the 14th, when a beat against the official number missed the whisper. That's a wrap. If this was useful, follow or subscribe for the next one, and tell us where we're wrong. Thanks for listening.